Hi, everybody. Welcome to another great episode of Homeownership Heroes. I'm your host, Bryan Bergjans.
And I'm Rick Bettencourt.
And Rick, today we're going to talk about the misconception about 100% financing. So, out there, and you've experienced, we've been in this business long enough where we've experienced this, and I am pretty sure that most people watching this video right now have.
Without a doubt.
Most customers, when you talk about 100% financing and with respect to the VA home loan benefit, automatically assume that they have zero money out of pocket.
That is true. Absolutely incorrect, you guys. So listen, 100% financing does not mean it's free, okay? There's going to be costs associated with buying your new house.
Correct.
Closing costs, appraisal fees, title escrow fees. You're going to have home inspection fees. So there's going to be a cost. Now, sometimes those costs are paid for by a combination of things. Maybe you got a gift, or maybe the seller paid for them, or maybe the lender gave you a lender credit. But there's going to be costs. And also, most states, most regions, you're going to have to give that transaction a earnest money deposit, some money out of pocket. That's a good faith deposit. Now tell them a little bit about what the good faith deposit really is going to do.
Well, I mean, earnest money basically is established for you to basically earmark that transaction. You're basically telling the seller, hey, I am putting skin in the game. I am not going to back out of this transaction.
Correct.
I want this. So typically that money is negotiated between your two realtors on what's a fair value. Because when you do new construction and you put earnest money, it's going to be a lot larger of an earnest money check versus buying from a normal, pre-existing
It's pre-existing, and that's a completely different transaction. So when you're talking about a pre-existing home that's already there, that earnest money deposit, that's your good faith. Like, I want your house, Mr. Seller, right? So real quick, let me give you guys an example how this works. You're buying a $100,000 home, right? Your earnest money deposit was $5,000, okay? Your closing costs are $5,000. What's gonna happen, right, is you close, your earnest money deposit is applied to your closing cost of $5,000. You don't get any money back, right? You never make money. Flip side, let's say you're buying a $100,000 house. Your closing costs are $5,000. Your earnest money deposit was $5,000. The seller and the lender combined to pay your closing cost. You get all your earned money back. That is not making money. It's just getting reimbursed money you put into the transaction.
Yeah, and also, too, there's a big misconception out there that you roll costs into the loan.
Yeah, you can't roll costs. No,
there's no such thing as I rolled costs into my loan.
No, because the regulation says you can only borrow the lesser of either the appraisal or the sales contract. So if you're buying a $100,000 home and if the value comes in at $120,000, you can't borrow more money to pay for stuff. You can only borrow $100,000. And flip side, if the appraised value comes in less at $90,000, you may need a down payment or renegotiate because you can only borrow for under the VA $90,000. And so it's very important that you can't. So if someone says you're going to roll your cost, they don't know what they're talking about and they're explaining it improperly to you. You can't finance closing costs like they are explaining.
Yeah, I think setting proper expectations. Again, Mr. Loan Officer, Mr. and Mrs. Realtor, make sure that you're setting the proper expectations with your customer. 100% financing does not mean free, and it does not mean that you will not have to bring any money to the closing table. So you can reach us at military@caliberhomeloans.com, where both Rick and I will answer any questions you have regarding this episode. So thank you again for tuning in to Homeownership Heroes. We'll see you next time. Oh man.